Hello, hello, can you hear me? Hello everyone. Right now we only have 2 people on the line, so let's just wait for a few more minutes before we start. All right, hello everyone. I think it's 11:03 my time, so I will just go ahead and start this session. And then if any of you guys have any questions, feel free to ask in the group chat. And then so today I'm from SignalPlus. My name is Tony Tian, and then today we're working with Coincall to give everyone a quick session about how to capture the market opportunities using crypto options, especially during this very potential bull market scenario in 2024. Why we are thinking right now is a potential bull market. Obviously, in 2022 or at the end of 2021, the Bitcoin price actually hit the top of the all-time high at about 60K, and then ever since the beginning of 2022, the price went down from 60K to as low as 16K. And then it was a very tough year, and in 2023 things are looking better. However, there are definitely some ups and downs and fluctuation during the period of time. At the lowest, probably early 2023, we are looking at 16K, and then it went up to 32K, and all of a sudden it dropped down to 26K, and sometime it was as low as 22K, right? And then finally at the end of the year we reached almost like a year high of 42K, just because the potential approval of the SEC, the ETF from the SEC. So what we're really thinking, is 2024 a potential bull market, because as of January 9th today, the Bitcoin price actually went up as high as 47K. It has only been 10 days, less than 10 days, the price went up by another $5,000 for Bitcoin. So there's a very high chance for us to believe the bull market is coming back. On top of that, the global economy is coming back. The stock price is booming. Even though for the first few couple of days, the Nasdaq wasn't performing as good, but again, overall, the potential of lowering the interest from the Fed is very possible. Some institute was projecting as early as March, even though me personally, I doubt that. I think it will be mid this year or even second half of this year. But regardless, the inflation is being controlled. The potential of lower interest rate is definitely possible. So that's why we're thinking 2023, regardless, it's a regulation, general economy, overall market, and then obviously the acceptance of the cryptocurrency is definitely in the positive direction. So that's why we're thinking 2024 is potentially going to be a bull market. And in this market, there are different kinds of investment vehicles for us to profit, right? And then definitely one of the most common one or straightforward one is the spot position. What is a spot? Spot is essentially you buy or sell the cryptos at a current market price. So what this means is, just like you buy gold or you buy silver, you have there's a market price for Bitcoin, a market price for Ethereum. You are essentially buying this asset, and you essentially have the ownership of this asset. Even though unlike gold and silver, obviously it's not a real physical asset, but the ownership, at least on chain, from the consensus, from the ledger, this Bitcoin, this Ethereum goes to you, regardless if it's in the cold wallet or hot wallet. So that's why it's called spot position. you literally own this piece of asset. So it's extremely straightforward, and just because you own this asset, you either own it or you don't. It's 1-to-1, right? So there's no leverage, and because there's no leverage, the risk is lower. The worst case scenario is the coin price went to zero and you lose everything. But again, that's the worst case scenario. So that potentially comparing against a lot of other instrument or investment vehicle, that is a fairly low risk. And then on top of that, because it's a physical, not a physical, but it's a asset that you literally own in your wallet, you can actually hold it in long term. For example, we definitely hear some of these story, like people bought or mine some Bitcoin 10 years ago, and then they forget about it, and then they leave it in their wallet for X amount of time. It went up 2 times, 5 times, 10 times, 100 times, 1,000 times, and all of a sudden one day they realize they actually do own this piece of asset, and they actually mined it before. So they went to their cold wallet or went to their hot wallet to actually find this piece of asset, and then realize they are actually now a millionaire, right? So just because you have the ownership, as long as you don't lose the code, you don't lose your private key, you can actually hold it for a long time, and then whenever you feel like it, you can went to the market, you can go to the market and actually sell the asset. So that's why comparing against a lot of other things, they need to consider the exchange. They need to be careful. Some of the protocol is not being hacked, etc. Like owning this kind of spot asset in your wallet is fairly safe, and you can actually hold it for a long time and potentially have some gain. And the second type of investment vehicle, as we know, I think everyone is fairly familiar, is the futures. So what is a future? A future is you buy or sell contract with promised time and dates, and at a predetermined price. For example, on the right side we can see. So for example, if we look at this BTC USD 26 Jan 24 instrument, this means you on the market, that's generally believed on the market, you can actually buy 1 Bitcoin on January 26 at 47,187. So that is what we call futures. You buy or sell the contracts with a promised time and date. When you own this contract, you actually don't own the underlying asset. You only own this piece of contract or this kind of agreement. And it is a form of the derivatives. What is derivatives? Derivatives means the price or the value of this contract or all of these things are derived from the underlying asset, which is the spot of Bitcoin. So that's why we call it derivatives. The value, the price is derived from the spot position. If the spot price of Bitcoin goes higher, this instrument will definitely be more expensive. If the Bitcoin price went lower, and this instrument will definitely be cheaper, right? So the Bitcoin price definitely has a lot of impact to the futures. On top of that, in cryptocurrency world, it is actually a very interesting invention, what we call perps. It's called perpetual futures. As it named, it actually doesn't have a settlement date or expiration dates, so you run forever. However, it is still a form of derivatives because its price is moving around the spot price, and the way they use it is the way they actually kind of like anchor the perps price to the spot price is called funding rates. So if the perps price is higher than the spot price, then the one who is buying or who is loaning the perps need to pay the funding fees to the ones who is shorting the contract. And in this case, because the one who is who is loaning the contract is going to pay fees, there are less people gonna, buy the contract and more people gonna sell the contract, right? And in this case, the price of the perps is gonna come down, and then the perps price will gradually come closer to the spot price. On the opposite side, if the perps price is lower, then whoever is shorting the contract need to pay the funding fees to the one who is buying the contract, and then eventually the price will come up, and then the perps price will go. That's how the mechanism works, and you can actually see all of these funding rate and then the APR here as well. So that's essentially your costs or your annualized cost for owning these kind of contracts. And then the cool thing or the interesting thing about the futures is it can be highly levered. Like in some normal exchange, as we can see, there are 5 times, 10 times. That's very common. And as some extreme cases, you can actually do 20 times, 50 times, or even 100 times in some very rare cases. What does this mean is if, say, for example, we are doing 20 times leverage, if the spot price or the underlying price go up by $1, then you can actually make $5. But if the price went down by $10, you can actually lose $50, right? And if we put into the perspective of percentage, if the price of Bitcoin went up by 5%, then essentially you can double your equity and then make 100% return. Just because 5% multiplied by 20 times, then it's 100%. And if the price went down by 4 to 5%, you can actually lose everything because 20 times multiplied by 5%, negative 5% is negative 100%, right? So this is highly levered, and in this case, it's extremely risky, right? Especially you have high leverage, and for example, in extreme cases, you do a 50 time leverage. And then it's not actually rare to see some of the coin went down 3% or 4% within a fraction of seconds. So in these cases, you will lose actually 150%, and in that case, you'll get liquidated very quick. And in some extreme cases, you may actually owe some money to the exchange. That's why compare against spot position, it is extremely risky. Right, and then if you are buying, all of these instruments, you actually have a expiration date or settlement dates, right? So you cannot hold it forever, hold it for a long term. You have to roll it. But if you are owning the perps, you're actually constant paying out the funding fees. That's why in some conservative cases, or if you're just trying to accumulate coins, we always suggest you to buy or sell spot positions. But yeah, futures definitely have its charm, and it have its usage. You can use it for hedging. You can use it for a lot of other activities with high efficiency, just because it's leverage. And then the next one we're going to talk about mainly today and in the future is what we call options. So what is options? Options is the right to buy or sell asset at predetermined price and time, which we'll go over in more details in the next slide. And on the buy side, we have limited downside, but unlimited upside, which I again will show you in the next slide. And for the sell side, just because the sell side is a counterparty of the buy side, so the buy side's profit is sell side's loss, and the buy side's loss will be the sell side's profit. So in this case, for the sell side, they will have unlimited upside, for the sell side. For the sell side, actually, yeah. So this is a typo. So for the sell side, there's actually unlimited downside, but limited upside, right? Because it's opposite from the buy side. And then the interesting part from the options is you can actually profit from a lot of different aspects. For the spot position, for the futures, there are only one way to make profit, which is betting the coin price is going up or down, right? If it's going up, and if you're long the position, then you are making money. If the coin price went down and you're shorting, you're making money. But for the options, you can actually profit from time, just because option has a specific time frame. As time pass, you can actually make money from the time passage. And you can actually betting against volatility. If the volatility is going up or down, you can actually make some specific bet. And again, just similar to the futures and spot, you can actually make money from the price movement. Again, all of these details I will go over in the next slide. And here is a very common, screenshot of options. And you can see actually, these yield are extremely high, meaning, the options can be highly levered as well. So in some of these cases, I think we did a screenshot where, the Ethereum price went up by, 5%-ish. However, the option price, as you can see, went up by, 37 times or as low as 14 times, which is extremely high already, right? So it can be highly levered. However, the leverage is not linear, not unlike the futures where you have a set multiplier. But again, we will go over them probably in the later section to show you how the leverage works in the option world. Okay, so what are options, to be more specific, right? So for call options, I kind of consider it as a lottery ticket, and then by definition, call options are financial contracts that give the buyer the right but not the obligation to buy an underlying asset at specific price within a specific period. What does this mean? If we look at this specific contract, it is called BTC, Bitcoin 26 Jan 24, meaning it's January 26th 2024. That will be the expiration date, and 48,000, that's the exercise price. And then we have this as a call, meaning before, or actually on January 26, 2024, we will have the right to buy Bitcoin at $48,000. What this means is if on January 26th, if the Bitcoin price went up to 50K, just because it just went up so quick and so much in the next couple of days, it actually went up to 50K. Then we can still buy Bitcoin for 48K, and then we can make a 2,000 profit right away, right? Because we can exercise this option at 48K and then sell it right away to the market and at 50K. So we buy at 48, sell at 50, then we make $2,000, right? However, for the put option is definitely the opposite. So put options are financial contracts that gives the buyer the right, again, not the obligation to sell an underlying asset at predetermined price within a specific period of time. So let's assume we are buying a contract that has an exercise price of 40K, right? 40K, and it's a put, right? What this means is on January 26th, we actually will have the right to sell our contract or to sell our Bitcoin at 40K, right? So in this case, if Bitcoin price went down to 38K somehow in the next couple of days, then what we can do is we buy it at the market for 38K and sell it right away, because we can exercise this option. We can sell it to someone, we can put to someone at 40K, then we can make a 2K profit. So that's where we're gonna exercise it, and we're gonna exercise our right. However, in some cases, for example, in this case, in the call case, if the price stay at $47,000 till the end of the month, then this contract or this option will worth nothing. Why? Because if we exercise this, then we are buying Bitcoin for 48K. However, in the January market, we can actually find Bitcoin at 47K. So we will never, buy the coin at 48K. in January 26 as a rational investor. However, we would, if we were to buy any Bitcoin, we will do it just in the market for 47K. So that's why we call it a lottery ticket. If the price went up, shoot up, and to the skyrocket, we can actually hold this lottery ticket and then buy the asset at a fairly cheap price. So that's why we call lottery ticket. But if the price doesn't go up or even go down, your lottery ticket will worth nothing, right? So that will make sense. However, for put options, we call it like an insurance policy. What this means is if you hold an asset, right? If you hold one Bitcoin, and if you have this kind of put option with exercise of 40K, then it is working as an insurance to allow your Bitcoin to sell at 40K minimum, right? If the price went down to 38K, you can still sell it at 40K just because you own this insurance policy. However, if the price stay at 45, 48, 47, you will never exercise your insurance policy. But again, it doesn't mean the insurance policy is not useful. It's just you never hit the rock bottom or hit the worst case scenario. So your insurance policy just didn't kick in, right? And there are some terms. So obviously, the first one is the underlying asset. The underlying asset in this case is Bitcoin. The underlying price is the Bitcoin price, where we can see here, at almost $47,000. And strike price or exercise price is the price where we can buy or sell our underlying asset at. In this case, it's 48K for this call option and 40K for this put option. Expiration date, that will be the time of this contract expire, and then the premium is the worth of this lottery ticket or insurance policy. When you're buying a lottery ticket or when you're buying an insurance policy, you will always need to pay some premium, right? So in this case, if we look at the market right now, this lottery ticket actually worth $2,000, meaning people, and it's actually pretty expensive, right? Considering there's less than 1 month to expire. So people have very high faith or high probability thinking the Bitcoin price will go up over to 48K or even higher, right? And then this is the quantity you want to exercise. If you want to do one Bitcoin, then it's one. If you want to do multiple, you can type in whatever number here. And then some people may ask, right? So for call option, put option, it's pretty straightforward if you own it. And one of the scenario that people are actually selling put option. So if you own a asset, and then you are if you own an asset and you buy a put option, then it's very natural. You're essentially working the put option as a insurance policy, or what we call hedging, right? So just make sure our bottom line is protected. However, sometimes people will sell a put option as what we call naked option, meaning you don't actually own any asset and you just sell it right away. One way to think of people who are selling put option naked is they are trying to work it as a limit order. So for example, I will if the Bitcoin price go down to 40K tomorrow, are you willing to buy it? Well, me personally, I'm definitely willing to buy it, because right now it's at 47,000 and no fundamental change whatsoever. And if it dropped to 40K, I'll definitely buy some at 40K. So the way I can do it in a more profitable way is actually I can sell the put option naked, meaning I don't own any asset, and I can sell the put option at 40K with a strike price of 40K expired tomorrow. And if the price went down to $39,000, my counterparty can sell the put option to me at 40K, right? I still need to buy it at higher than the market price, but what I gain is the premium I receive, right? Because I sell the insurance policy, I can make some premium. So I can actually buy the asset at 40K minus my premium amount. Then you will say, hey, why don't you buy it at 39K? well, if I work this as a limit order, I will put my limit order at 40K, and then regardless, right, if the price hit and it continue to go down, then I'll still buy my asset at 40K. So it's a limit order, but it's a limit order with some profit from the premium. And in some scenario, the price never dropped down to 40K. It actually would shoot up or just went down a little bit to 45K. I never get my asset. However, I can still receive my premium in that case. So I'm not losing anything anyway, right? So this is one way to think of, selling some of the put options. Another way to sell call option is what we call covered call. Right, so if you own an asset, let's say I own one Bitcoin, if the price went up to $55,000, I'm okay selling it tomorrow, right? So what I would do is I will own the asset and sell a call option with a strike price of 55K. Meaning if the price go over 55K, I'm obligated to sell my asset to my counterparty, because my counterparty will exercise it and buy the asset at 55K, right? And why would I do that? Because I'm putting my limit order at 55K anyway. So even though the price eventually shoot up to 56, 58, I still want to sell my my asset at 55K just because it's a limit order. And on top of that, by selling this call option, I'm selling a lottery ticket and I can receive some premium as well. And sometimes the premium can be extremely expensive. So, I'm selling my asset at 55K plus some premium, and I am happy, right? And in worst case scenario, if the price never hit 55K, I can still make my premium and keep my asset. So it's kind of like a winning situation regardless. So there are some basic, use case for owning for buying or selling the options. And then talk about the Coincall exchange. In a lot of the traditional centralized exchange, you will only see Bitcoin, Ethereum, Solana options. However, at Coincall exchange, they actually have a lot of the altcoin options for you to play with, and then this will provide a lot of more possibility and then ways for you to be creative or hedge your position or come up with some arbitrage strategies, etc. So that's why I think Coincall is definitely one of the good spot for you to do altcoin options, just because a lot of other places doesn't even have these options. And then the price, if you dig in further, the price of these options are actually pretty fair, and some of them actually have very high volatility, like for example the Dogecoin, and sometimes you can see the Matic. Some of those can be, or even Filecoin can be extremely volatile in some cases, and the more volatile it is, or the more volatile the market is, the more valuable the option can be. Just because if the market, what the market is going to be tomorrow, you'll never buy a lottery ticket. But if you don't know how high or how low the price is going to get tomorrow, then the lottery ticket or the insurance policy will be extremely valuable for you to own, for you to either to make some small bet or to protect yourself from unknown risk. So that's why Coincall is working with SignalPlus just to promote some of the altcoin options for everyone to play around. And then a little bit background about SignalPlus. I know a lot of people may not know much about SignalPlus, and SignalPlus is a essentially what we consider us as a trading toolkit. So by connecting to us, you will be able to conduct automated risk management, execute your order in a much more efficient way, analysis your P&L and risk very clearly, and also conduct market analysis as well. And then we actually offered something we call smart dealing, and some of the other automated functions like dynamic delta hedge to help the traders to execute the trade in a very efficient way. We essentially replicate how a professional trader or how a experienced trader thinks, and then kind of use it in the automated algorithm to help you to execute your trade in a much more efficient and low cost way. And then right now we are connected to Deribit, Bybit. We also connected to OKX as well. And we also have something called virtual account. So virtual account is a place for you to do paper trading, to record some OTC trades which may not clear through centralized exchange, and you can always review all of these positions in our centralized in our trading toolkit to understand the P&L and the risk, and to see the performance of those paper trades or simulated positions. We also offer ChatGPT function, treasury function, and economic calendar, which I will show you in a minute. And very soon we'll push out our first mobile app, and then we'll also have the spot trading position go live, and potentially we'll work with Coincall to have Coincall on board to our platform, and you will be able to trade altcoin and some other instruments as well on our platforms in the Coincall exchange. And then so for SignalPlus, we are offering daily knowledge sharing. We have the Telegram group, and we also have the Medium. As you can see, the link is here. And then the first ledger we're providing is definitely the trading toolkit. People can use it to trade in a much easier and efficient way. And second part is the daily vol commentary. So it's a daily volatility change and large block trades like announcement. As you can see in our media, we have the daily vol commentary. It's essentially like a recap of how the day is going, and then how the general market is moving, what are the hottest trades, and what are some popular trades from some wheel, so you can learn from it. And then the next ledger is what we call daily morning briefing. So these are some key news in the global financial market update. As you can see, yesterday the Fed come out and then talk about something about the tightening, about some potential of lowering the interest rate in the upcoming month. So we always summarize all of these macro events for you guys, so you can read it through within minutes and understand what's going on overnight in the market. And then the second thing is what we call laboratory, right? So we have this ChatGPT 3.5 integration. It's a 724 virtual assistant specialized in topics such as stocks, cryptocurrency, derivatives, blockchain, and macroeconomics. However, it can also answer a lot of the generic questions as well. As you can see, I just come up with some random question like, say, what are options? And then it will tell me options are financial derivatives, blah blah blah. And you can ask some other question like what are the difference between the options and futures, and you will answer in a very clear and very straightforward way for you to understand. And then the next one is what we call economic calendar. And economic calendar is a real-time update on the latest economic event. It actually even give you the detail. As you can see, this is, let's say I'm looking at today, and what are the economic event in the upcoming period. For example, there's nothing happened today, but Fed's bar speech is going to happen tomorrow at 1 a.m. my time. And also on Thursday, the CPI will come out, and then what are the consensus, what are the previous number, and it will even give you a detailed explanation on the impact of each of the event and on the impact of corresponding data. It will tell you, okay, if it's higher, then what the general economy will think. If it's lower, what the general economy is thinking, regarding, the US dollar. You can see us. It will say if it's going to be bullish or bearish on different scenarios. So this can be very handy for people to, to trade, and then especially to trade against big events. And then I think I kind of touched on the high level, what are the options, what are, some of the financial vehicles that we can use to make profit, and give us a quick introduction about SignalPlus and Coincall, and what we can do and how we can help you to trade more efficiently and trade better. In the next few sessions, we will actually go into more details about how you can, make money using options, like what are the different, more diving deeper on the futures and the options. What are the options, how we can use the options, and how we can understand the option chain to, essentially to execute orders. What are some common option strategies, and how to understand the payoff diagram of complicated, option strategy, and then how you can price an option if the option is pricing fairly, or if it's pricing too expensive or too cheap, so you can actually buy or sell those options. And lastly, we can understand, what are the option Greeks, and then how you can utilize the option Greeks to form a complicated and comprehensive portfolio. And then yeah, so that should be pretty much it for today's session. I think today's session is just a very quick introduction for everyone to have a general feeling about the option, about the derivatives. And then yeah, if you want to understand more, definitely join our community. You can actually using our trading toolkit for free at t.signalplus.com. And we also have our official website, our Twitter, Telegram, Medium, for you to use. You can always subscribe to some of our channel to see our some of our content, like I showed it here. And then you are always welcome to join our community to discuss some of the strategy. Again, we'll have a few more sessions, on the cryptocurrency options, and hopefully you can learn something from it. And then if anyone have any questions, feel free to type in the chat, and then we can talk about it right now. If not, I guess I will see you guys in our community, and hopefully I'll see you guys in our next session, probably in next week. I'll just wait for a minute or two for any general question. If there's nothing, yeah, hope everyone will have a good day. Any questions? Any thoughts? All right. If there's nothing else, again, really appreciate everyone listening. We'll have more events in the upcoming weeks to show you guys about cryptocurrency and how we can make profit. And I will see you guys in the next session and in our